All right, let's bring in Kevin Green, senior markets correspondent, to help set up the action today. All right, KG, let's talk a little bit about, kind of what it seems to be the focus. In general, we've been a headline-driven market recently. We saw this grind higher to start the week, but it looks like we're pulling back amid these, ongoing geopolitical tensions. It feels like it's kind of this tightrope between two sides of the coin. How do you think the market is pricing risk as it relates to this Israel-Iran conflict?
Yeah, I mean, if you kind of look at the volatility curve just in general, this conflict is actually being underpriced, to say the least here. Now, yes, we are seeing some headwinds when it comes to the price action. Pretty decent day yesterday. Market breadth was actually pretty good. But obviously, there's some uncertainty of what's going to happen next and how it's going to really impact energy markets. I think that's really what the market's kind of focusing on, the inflationary picture here and what we do actually moving forward. So you are seeing a little bit of a back and forth, but this is not an aggressive sell-off by any stretch because of this event. In fact, we probably see more dip buyers coming in and hoping that maybe there is going to be some form of a resolution here over the next couple of days or so. And that's probably why we're not seeing these sharp reactions to the downside. Now, we have to just kind of note liquidity is drying up a little bit. So you will see some maybe some aggressive intraday swings. But right now, it does appear that the bulls are still holding this thing up. It doesn't seem like they're really too concerned yet as to any type of fallout that we might see between the Iran-Israel conflict here.
Okay, so when we think about oil prices moving a little bit higher today, up a little bit more than 2%, back above $73 a barrel. But now it feels like it's becoming kind of range bound right now. Do you feel like there's this tightrope act there as well?
Yeah, everybody's really kind of looking at the logistics of the Strait of Hormuz, and if we are going to see any type of checkpoints being built out by Iran or any type of actually closure of that strait. Now, late yesterday evening, there was a little bit of a concern because there was 3 tankers that were actually on fire about 20 miles off of by Oman. And so at first, everybody believed that maybe Iran actually hit these tankers, but come to find out it was actually a collision that took place. Now, there is significant GPS jamming that's taking place around there, and that could actually be the cause of it. And you are seeing tanker rates actually increase to the upside, both when you're looking at Middle East to Africa shipping routes, which is up around 40% over the last 3 days, or even if you're looking at the Middle East to Asia routes, which are up around 20%. So the energy market's really focusing on the impact of critical global infrastructure that could impact the supply chain. Right now, everything that has been hit has been really focused on domestic production or consumption, either in Iran or in Israel. So that's why we're probably seeing a little bit more a muted response when it comes to oil just in general here. But I don't think that there's enough yet to really try to spike this thing higher. Now, if we do see U.S. getting into this conflict kinetically, that probably will then drive prices a little bit higher. Or if we do see any form of a regime change or a coup taking place, that could also create a little bit of uncertainty and then push prices higher. The other thing that actually is kind of suppressing prices right now is none of the major allies for Iran has really come out and stated that they're willing to provide support militarily. So if you're looking at Russia, which is obviously already in a conflict, it doesn't seem like they're making any major comments around trying to support Iran. And also China, which is one of their biggest trading partners, they have made some statements at the UN, but nothing that really signals that they are willing to help out militarily in this conflict. And so if we do not have any of those bigger actors or those major players within the world trying to step in outside of the United States, that could also keep prices, for the most part, kind of depressed. So a lot of volatility in the crude space right now. You have to watch the news. And Diane, I would just say, if you do not have to trade in this environment, it's okay to just sit back and just watch, because the news headlines are really going to push trades. The technicals are going to take a significant back seat over the next couple of trading sessions until we actually figure out a clear direction on how this situation actually does get resolved.
How much does it matter that President Trump left the G7 early?
Yeah, I think there's a lot of people looking into that and reading into that. There could be a multitude of factors that could take place. Look, if you kind of look at what happened within the G7 just yesterday, President Trump's comments and maybe some of the overtures by other members within the G7 here, you could also come to the conclusion that he probably was a little bit frustrated and did not want to be there. This is not the first time that he's left the G7 summit early. Obviously, there is a reason for him to do so, and he might have utilized that reason as an out. There was also some comments that he posted on True Social around Emmanuel Macron and his assumption on why he's leaving, trying to create a ceasefire or broker a ceasefire. President Trump has downplayed that, but no one really knows, are we going to get into a military conflict, or is there going to be a bigger resolution to this space? And until we actually have a little bit more clarity there, I think the market's going to be in a holding pattern, maybe gyrating and trading within a range of 50 or 75 points over the next couple of days. If you're looking at the S&P 500, until we actually know what is actually going to happen here. But if you game theory this out, there's a lot of theories that are taking place here. I think you just look at everything at face value right now, because there's a lot of misinformation being put out into the space. The Wall Street Journal piece early on yesterday created a nice little bull run in the market, only for it to be kind of walked back later on in the session.
Okay, KG, before I get your levels on the S&P 500, because I know you're kind of leading to that, I think one thing that stood out to me is just the price action in the Mag 7, and it's been quite the recovery overall, but not all members of the Mag 7 are created equal here. All of them gained ground yesterday. What are you paying attention to within the group?
Yeah, it's going to be the semiconductor space. So NVIDIA, that price action, as you kind of talked about their performance, saw a decent little bid yesterday. But if you even look at some of the other semiconductors out there, AMD, which did not have any news that I saw on the wire, I saw a really strong gain yesterday. Marvell doing the same. If you're looking at it from a portfolio manager standpoint, you start looking at companies and sectors that might not be exposed to this type of geopolitical risk. And technology and communication services are two sectors that might be able to weather the storm, and they have been safe haven plays in the past. That might be the same thing that we are seeing right now.
Okay, and then for your levels on the S&P 500, what are you looking out for today to the downside and the upside?
Yeah, to the upside, 60.50. To the downside, your first level is 6,000. So once again, a 50-point range that's being priced in right now.
All right, 50-point range, 6,000 to the downside, 60.50 to the upside. That's our Kevin Green, Senior Markets Correspondent. Thank you, KG.